Alright guys, we've got a pretty important video right now because in this video we're going to be going over Tesla's Q2 earnings that were just posted yesterday. And Tesla is my biggest position, so their earnings calls are always important for me to look into. And I'm sure most of you, if not all of you guys, are invested in Tesla to some degree. So for the people who have been following this channel, we are currently up 117% on this position and have an average cost per share of $730. And there was a lot of information in this earnings call, so let's get into it. Let's take a look at some of the highlights first, and you can pause this video and read the whole page if you'd like, but for now let's focus on the blue highlighted portion that says they earned $104 million in GAAP net income and $451 million in non-GAAP net income. That one's not as important in Q2. And then it says 4 quarters of sequential profitability. Now this was one of the numbers Tesla investors were paying very close attention to, because since net income has been positive for 4 straight quarters, they are now eligible to enter the S&P 500, where essentially money is going to be forced into Tesla stock because these large funds who hold positions in the SPY will eventually be giving money to Tesla. However, Tesla joining the S&P 500 is not a guarantee just yet. But at the same time, many analysts do expect them to become a member of the S&P 500. Now also in this earnings call, Tesla picked Austin, Texas for their next location for a gigafactory, but more importantly, Tesla has 3 factories set to be built in the next 12 to 18 months, which is right around the corner. And if we look at the installed annual capacity, we can see that they produce 690,000 units so far, and their production is going to grow significantly in 2022 because of their new gigafactories, with heavy production for their Model 3 and Model Ys, and they'll eventually get to produce some of their other products like Cybertrucks, semis, and roadsters. And these new factories will help Tesla meet demand levels, which leads us into their financial summary. And if we take a look at Tesla's financials, we can see that their adjusted EBITDA grew 111% year over year and 27% quarter over quarter. And if we look below that at adjusted EBITDA margin, we can see that EBITDA margin grew from 15.9% up to 20% in Q2 and is up 1,100 basis points year over year. And this further demonstrates that Tesla has no problem with demand levels. And it's important to note that the automotive industry is down 30% this year in terms of delivery. However, Tesla's deliveries have actually grown this year, which further illustrates how strong Tesla's demand is. If we look here at the top for the Fremont factory, again, I'm not going to read the whole thing word for word. You can pause the video and fully read these slides if you'd like, but this paragraph is pretty much saying that production capacity for Fremont is expected to increase 20% from 400,000 to 500,000 units for their Model 3s and Model Ys. Then below it in the green for Shanghai, it shows that their Model 3 is the best-selling EV in China, and their production lines for Model Ys in Shanghai will be up and running next year in 2021. And if we take a look all the way down at the Berlin Brandenburg factory, it's currently under construction, and they plan to implement more vertical integration in this factory so that the production line becomes more efficient, which brings up another important note. Every new factory will be more efficient than the next because they'll be able to implement more vertical integration and uncover bottlenecks. In addition, Musk expressed his confidence that their autonomous software will have all self-driving functionality done by the end of this year. So far this year, they implemented stop sign and stoplight recognition, which is pretty impressive, and full self-driving software for their vehicles will exponentially increase their asset values, no doubt. And also, one of the biggest segments that analysts aren't emphasizing enough is Tesla's energy segment, which is solar roof, which if you want to compare energy industry to the auto industry, the energy industry is substantially bigger, and Musk said in this call that eventually he expects the solar roof side of the business will be just as big, if not bigger, than their auto business. So to recap this earnings call, Tesla became eligible to join the S&P 500, which will literally force money into the company. They plan to build 3 new factories in the next 12 to 18 months. They continue to show endless amounts of demand, and their confidence for their automobiles will have full self-driving functionality by the end of this year. Overall, this was a pretty impressive earnings call, and the next couple of years are going to be fun to watch as an investor. Thank you guys for watching the video. Make sure to smash that like button and subscribe, and have a great day. Bye.